Welcome to our video on understanding and reducing underpayment penalties for taxes. This is especially relevant for individuals with both employment income and side businesses who might find themselves in situations where income tax payments are inaccurately withheld. But don't worry, we're here to guide you through the essentials so you can minimize any penalties and handle your taxes like a pro. Here's what we'll dive into during this video. We'll start by understanding underpayment penalties. Then we'll explore strategies to reduce these penalties. Next, we'll look at common mistakes people make and wrap up with discussing tools and software that can help. Ready to get started? Let's go! Underpayment penalties arise when you've not paid enough taxes throughout the year. The IRS expects taxpayers to meet either 90% of the current year's tax liability or 100% of the previous year's tax. For higher incomes, those with an AGI above $150,000, the requirement is 110%. If your total tax due is less than $1,000, penalties are not applied. Now let's look into some strategies that can help you reduce or even avoid these penalties. First, make sure your W-4 reflects your income and deductions correctly to optimize your withholding. Second, if you have income from self-employment or other sources not subject to withholding, make sure to pay estimated taxes on time. Third, consider filing Form 2210 to use alternative calculations that might work in your favor, such as the annualized income installment method. Fourth, contribute to tax-advantaged accounts like traditional IRAs or HSAs. Finally, review your business expenses meticulously to claim all allowable deductions, reducing your net income and thus your overall tax liability. Let's test your understanding. What form allows for alternative calculation methods to potentially reduce penalties? Your options are 1. Form 2210, 2. Form W-4, 3. Form 1044, Form 8862. You may pause the video now to think about the answer. We will discuss the answer in the next section. The correct answer is Form 2210. This form provides various calculation methods, allowing taxpayers to demonstrate timely payments and potentially reduce penalties. Let's go over some common mistakes you need to avoid. Paying taxes late, even partially, will incur penalties. Ensure your W-4 is accurate to prevent significant underpayment. Always calculate your estimated tax liability accurately, especially if you're receiving income from multiple sources. Finally, pay close attention to payment deadlines. Many tax software programs offer their own methods to calculate penalties. While these can be useful, sticking with the IRS method is a safer option as it ensures consistency and minimizes errors. Use tax software that provides penalty calculation options. To wrap up, remember to understand the IRS requirements to avoid penalties. Make sure your payments are timely and use available forms and resources, like Form 2210, to reduce penalties. Staying informed and well-prepared throughout the tax year ensures peace of mind when it's tax time. Thank you for joining us on this tax exploration. Don't forget to like, share, and subscribe for more informative content. If you have thoughts or tips of your own, feel free to share them in the comments below. Happy taxing!